Hi, everyone, and welcome to our US presidential debate. So this will be a different debate than many other debates. We're not here to create an echo chamber. We're not here to reinforce your beliefs. We're not here to colour the way that you vote. Our goal for this session is really simple. We want to give you as much information as we possibly can on what may happen in financial markets due to the outcome. We'll talk about what happens if this happens, what happens if that happens, how that would affect markets, and how that may affect your opportunities to make money. As always, what's happened in the history, the opinions of our people, they're not soothsayers here. Please make your own decisions and invest wisely should you choose to follow that advice. The format for the debate, James, I understand we are we're streaming, right? We're good to go, right? I'm going to take this as a yes from James. We are good, fantastic. We are good to go. Look, good to have you guys. Companies, Dan will change the chat for this one. I think probably the hosts and panelists while we go on. Look, the format for the session is reasonably simple. I'll ask them a question. They will take it in turns to answer it. If they go to the 3-minute mark, I'll give them a warning. If they go at 3 minutes 30, I'll cut them off, and that'll be the end of their answer. Our intention for you guys is to keep this quite snappy, to keep it quite on track, and to keep it very much focused on how this election result. And look, we all know, right? We're to an election right now, too close to call, and we are right on a knife edge. And as traders, they say that markets hate uncertainty, and what that really means is that traders hate uncertainty. What we would really like to do is know who's going to win, so we can start in position based on who's going to win. And for now, what we have to do is start and prepare a case for either side, and wait and see if we can get a bigger read. As you guys, I'm sure, will all know, this won't be decided by nationwide polls. This will be decided by who votes in around 7 states, and those 7 states carry the electoral college votes that will decide the president. Most of the other states are already one colour or the other, and these 7 marginal states are most likely. It's a US presidential election. Nothing is guaranteed, but they're most likely to lead us to a president. We'll be watching and discussing with you guys over the next few months those states very closely and trying to keep you informed. If you would like to vote on who you think has won this debate, you can go to the Premium Traders Toolbox. There is a poll up there, and you will be able to vote for who you think has won, and we will keep you informed of the result. In reality, what we're hoping is that all of us are the winners, because all of us take away information on what to do with this selection as it comes up. Before this session started today, we've done a coin toss. Adam has won, and he will answer the first question first. So, guys, as we build up to the election, we're aware of many polls, and my question for you, Adam, in this, we're going to say for now that Adam is going to largely represent the Democratic side of this. Gordon is largely going to represent the Republican side of this, but they're both welcome to offer. If they want to offer some different views in their answer, they're welcome to. What we're really looking for here is knowledge. Question number 1, Adam, if your candidate, Kamala Harris, is leading in the polls pre-election, how will that affect markets? So if Kamala gets a clear lead in the market, in the polls, how will that affect the market?
So what I was going to say is, because she's currently vice president and and working with Biden, I think that the current policies the market will perceive the policies to be relatively similar. In other words, that the markets will respond largely in kind towards her as they are currently. So I think to keep it really short, I think that the current market sentiments are likely to stay the same, largely pre-election. The only other thing I wanted to add to that is, yes, I think that there's two personalities where the markets are not 100% tied into who is in the White House, but they are affected by it because of the policies. But yes, in short, I think that the markets will adopt a similar stance in the run-up to the election that they have currently.
What's that?
So the markets are largely very bullish. Plus, we've also had a rate cut. Now, historically, rate cut tends to weaken the currency, but also it tends to be very attractive for the markets. They tend to appreciate rate cuts because it can, simply put, stimulate the economy. And so this is something I've observed. I think this would be of interest to everyone, is I do think that in an election year, I think that presidents like to be able to have a rate cut in their back pocket. I think that they like to be able to do that to juice the markets in the run-up to the election. I think that's pretty much a universal strategy. I think in this case, there was a 50, for those of you who weren't watching, there was a larger than average rate cut recently. I'm not convinced it was required. I think the market's doing well. I think possibly the approach here, the question is, was the rate cut justified, or was it a tactic? At this point, I don't really have an opinion on that. But yes, so long story short, the markets appear to be very bullish. I do think they are a little bit overextended and due for a correction. We managed to push through September with a very strong, Septembers are historically very weak, but largely, 80 or 90% of the time they're bearish. We managed to work through a very, very incredibly bullish at the moment, almost a little bit too hot for my tastes.
Nice. Okay. That is your answer to question number one, Adam. We are now going to go to Gordon and ask him to answer the same question. Gordon, how will your candidate, Donald Trump, leading in the polls pre-election affect markets?
That's a really good question to contemplate, but in order to answer it, I have to be able to say there's really kind of two answers. One, how will Donald Trump leading in the polls, according to what is being reported, as opposed to what is actually happening, make a difference? And I don't think Donald Trump is ever going to be described as leading in the polls all the way up until the election. So it's important to differentiate between, whether you're hearing news or reading on realclearpolitics.com or something and saying, oh, well, he's not leading in the polls. That's going to be the case no matter what. But there's a lot of distrust with the media's handling of data. And so I'm sending these links here that just kind of cover. These are a couple of videos that cover. I don't have time in this to go into it, but here's the thing. There's one polling group out there, Rasmussen, which actually thinks Trump is leading in the polls, and their whole, why they think that's true is in one of those videos that I just sent the link for. And what's important about that to me is not the conspiracy stuff. The thing I need to track as a trader is, if Donald Trump is actually leading in the polls, but it's not getting reported, how am I going to tell whether the market is actually responding to that? Because the market, I would expect market participants to know something closer to the truth than not, if in fact what you're hearing on mainstream media is all just smokescreen, right? Yeah, I don't know if it is or isn't, but if it is, then I should be able to track actual market movements to what's going on. And I think that Donald Trump, the more people think that he is leading in the polls, the more volatility it will inject into the markets, because it leads to uncertainty. I think Adam's right with, the current administration is the devil and therefore the markets will respond with less volatility if market participants think Kamala is leading in the polls. If they think Donald Trump is going to start leading in the polls, that's going to mean change. And with change comes uncertainty, and with uncertainty comes more volatility. So I think that's the connection.
Yes, Gordon, thank you very much for that. We'll move on to question number two. Gordon will go first on this one. But we know there's a lot of echo chambers in the world, and that's my clock timer counting down for you guys. We know there's a lot of echo chambers in the world. We know there's a lot of people, and it pushes people to have a very reinforced view on their side. I think one of the things that really adds to our discussion really is some balance. And I'm going to ask you, Gordon, tell me something good about the other candidate.
That was a very challenging question. Here's what I came up with. She has the support of the Democratic Party, the Democrat Party coalition, to become the vice president. I mean, that all by itself is very significant. And she managed to hold that support so strong that that the party would make an executive decision, not taking a vote or anything, to say she's the one we want to go with, not the current sitting president. I mean, this is really historic. Um, and some detractors would say, well, that doesn't have anything to do with her. That has to do with the fact that she's in office and so forth. But I would say that is actually a big vote of confidence by the party to select her, and so they must really think that she's capable of carrying this home. You could debate about that, but that's where it is. Their belief and trust is centering on her, and that's not insignificant.
Thank you, Gordon. Adam, for you, please, could you tell me something good about the other candidate?
Gordon's right. It's a tricky question to answer, and it requires thought. So what I feel, and I think Donald Trump is unique in how he has disrupted the political sphere. And he hasn't just disrupted this in America, he's disrupted it globally. We had about 70 major elections this year. It was absolutely massive. And for the first time that I'm aware of historically, it had polarized to become democratic or anti-democratic, or autocratic, whichever way you want to phrase it. And so where he gets credit in two ways, which these might sound offensive, I don't mean them this way, is he's woken people up from people who were not paying attention to politics and not paying attention, who just sort of kind of asleep at the wheel. He's woken the whole world up to pay attention to what's going on with your political party and relationships with other countries. And I think this is a good thing. I think the fact that if people are now more engaged, paying more attention, more aware, having to educate themselves, suddenly having to look at history again, all those different kinds of things, I think, I hope, and I believe actually will be good for everybody going forwards. I think it's also got people to be more engaged in civics. I think we need to pay more attention to that. I think, so I think that's a big part of it. And then the second part of it, so there's two things. And the second one was an awareness of quality of candidates. This is a big thing. And quality of candidates, and what I want to say next is going to sound derogatory. I don't mean it this way, but mental health. Like, there was a lot of discussion about whether Joe Biden was mentally capable of doing the job, and all these kinds of rumors, and the same actually going around about Donald Trump. And I think it really got people talking about at what age do you become maybe too old for the game, or should you, do you need to pay attention to that? And also, I wanted to add something in here, is that you're not just electing an individual, but you're electing an administration and a party. And in the US, there are government employees, by the way, who there's so many of them, by the way, that it's not just the cabinet, but there are people who are both Republicans and Democrats that perform roles throughout the government that will just stay with those administrations. So they'll perform for 20, 30 years, regardless of who is actually president. So you just need to kind of keep that in mind. Don't replace every single government employee, because your political affiliation should be separate from your job requirements, so to speak. But yeah, so to come back to the question, I think it really has got people to pay attention to that. And I think that that's a very good thing. I think we can't complain about the state of anywhere we are in the world, the state of our political situation or our lifestyle, if we don't actively get involved as citizens.
Cheers. Well on your 3 minutes too, Adam. So thank you very much for that. Look, I think it's really interesting. As I say, I personally, I think it's really healthy to consider some of the positives of your opponent. I think that we live in a world now where people get very much, once you have a side, your social media just pulls you down one side. You only hear one side of the debate all the time. It's really interesting to hear some positives about the different candidates. How, after all, had a two-horse race to lead America. There must be some positives about both sides of this for them to be in this race. You would think they're both pretty talented people to have found their way to it. Look, my next question, I asked you a little bit earlier about, what happened if your candidate was leading pre the election in the polls, how that would affect the markets. And look, we're really interested in the markets. How will this affect the market? And my next question, Adam, to go first. Look, at the end of this year, no one's going to care who was leading in the polls. They're going to care who wins. If we get a Democratic win in this presidential election, how will that affect the markets?
Okay. I'm going to request to share my screen, if that's okay with you.
Yeah.
Now, for those of you listening, at the end, similar to Gordon, I'm going to drop the entire presentation into the group. It has sources at the bottom of each slide. You will see sources here, so they can be fact checked if you want to do that. So here's the thing, very much what I want to kind of bring about is the single most influential book on the economy that I've ever encountered is Ray Dalio's Changing World Order. It's one of the most amazing books, absolutely. So it's phenomenal, and again, I find that following the traditional, so Warren Buffett, Charlie Munger, Ray Dalio, that really gives me a sense of how the economic machine is going to go. The reason I'm telling you this is that all of them agree that as long as that middle class of America is strong and healthy financially, that will provide a strong economy. Okay, now strong economy doesn't mean no inflation. It doesn't mean a weaker or stronger currency. Those are kind of tied into that, but it does mean that. So her tax policy is just very simple. Taxing, the idea is to tax the upper class because there's a wealth redistribution to the upside, which is not good for any economy. So improving regulations, especially with regards to climate change, healthcare, obviously, as we should all know, the US American healthcare system is abysmal. It's the worst in the world. It's terrible. I don't know if it's the worst in the world. That's a weird thing to say, but it's definitely shocking that an ambulance, people will drive in a car instead of call an ambulance because it costs them $2,000. It's absolutely insane. Renewable energy, we obviously need to go there. We need to be aware that the US is 4 to 5% of the world's population and provides 20 to 25% of the world's pollution. They need to change gears. So they need to improve regulation and they need to move towards that. There's nothing stopping them from doing that. And this is one thing where I'm going to step here and be clear that the opposite administration is very clear about removing these regulations. So just be aware of that. Not necessarily with regards to the energy focus, but regulation. So just be aware of that. And trade relations. Obviously trying to make sure that globally we can do more trade with the US. When the US economy does well, the rest of the economy does well. So for me to sum up, the best part about this is making sure that the middle class is the one that benefits the most because it supports the most. And a big part of that is taxing the uber wealthy, which is currently why we're in a lot of the problems we are. You look at big problems around the world, almost always you could track it to a billionaire at the top, where a lot of the money is going and they don't care about the regulation because they'll just buy themselves a space ticket or build themselves a bunker underground. Paul, have I answered the question?
I think so. Tell me this, Adam. As a trader, how do I position for that?
So as a trader, I think for the most part, again, obviously, if you're a technical trader, you're really just going to follow the price action. So no matter what happens, but I think there's going to be stability here. And what do I mean by that is I do think there's a potential for a weaker US dollar. Look at that. And the weaker US dollar will provide a boost in many ways to a lot of commodities as well as to a lot of indices. Obviously, within that, you'll have corrections should the dollar strengthen. So in other words, if we look at the dollar as to what it's likely to do, we could see a weaker dollar based off rate cuts, based off just where it is technically in the charts. If it breaks outside of the range it's in, and that would boost commodities potentially, that would boost, especially gold is on fire. Gold needs to have a correction as well. I think a lot of the markets are running very hot right now and they need a correction on the monthly time frame. I think we're due for a correction at some point, not a bear market. We've just come out of a bear market, but we are due for a monthly retracement. But for the most part, I think the markets will continue in many ways in the way in which they are. So commodities should get a boost. Currency markets, on the other hand, we could see some interesting gains on the majors against the US dollar. So really it comes back down to the US dollar, how the markets respond to a weaker US dollar, if that's going to be the case. And really rate cuts tend to lead towards a weaker US dollar.
Well, Adam, thank you very much. So, Gordon, if Donald Trump wins this election, how will that impact markets? I'm just going to give you a second here for Adam to release the screen in case you want it.
Oh, yes.
We won't get you through. We'll just clear it up. So if you do want to go, you get your full 3 minutes. Right here, Gordon. So how will a Trump win impact markets in this election?
So the one thing that is pretty clear about, the points Adam raises, the connection between what he's saying and how the government's activities actually play out is a big unknown, right? If you say, well, climate change is so important and we need to do something about that, okay, assume that's true. What is the government going to do? There isn't a straight line and a clear cause effect between the government says we're going to do something, and then they go and they try to do it, and the outcome is, wow, it's all better. Everything is so much better. And how will that affect us economically? There's nothing but question marks along that way. So I find it really difficult to be able to anticipate, if you say, well, Donald Trump's not going to do anything about the environment. Well, that's a whole debate all by itself. But here's what we can know for sure. What did the energy market, and we'll just use crude oil, that's what I've got up on the chart, as the proxy for this. What did it look like when Donald Trump was president, and what does it look like since? And that has a really clear, easy to understand answer. So on this chart, this is the crude oil futures. I've got the area of Donald Trump's presidency circled. And of course, everything since then, you can see the difference, right? So the reason that oil prices were so much lower when Donald Trump was the president was that he pushed something called energy independence, which basically means American oil producers should be encouraged, not only allowed, but encouraged to just produce as much oil as they can in whatever way they can. And that doesn't mean, doing it irresponsibly, but various different methods, through fracking, through shale oil, through oil sands, whatever. And that energy production, that oil production rather, brought prices down, gas prices down within the U.S. very significantly. Everybody in the U.S. saw it, and it's a huge difference in voters' minds still. And if the gas prices are lower, that means transportation costs are lower. That means the cost of goods is lower. And I mean, from his point of view, or from his administration's point of view, they felt like, hey, that's going to drive the economy and strengthen the purchasing power of the middle class that Adam mentioned. And so everybody knows that he favors those kinds of policies. And I think that if you look at this sort of support line, I think that's probably the best market indicator of whether or not Trump is going to win. I have no idea whether he is, but if he were to win, I think what you'd see is oil prices begin to come down in anticipation of that. And that's going to have a domino effect onto lots of other things. But this is the chart I'm watching and paying a lot of attention to with regards to the election.
Yes.
I'm
going to ask you a question. Sorry, you finished?
I just have I would like to reply to that when that's allowed. Thanks.
I'm not sure I like any replies. Gordon, the oil price chart that you show us for Donald Trump's presidency does have a large spike down, which is likely to be COVID related, isn't it?
Yeah, that's COVID, all that, yeah.
Okay. Cheers. Thank you very much. Okay. Look, I'm going to come back at the end, and I think I'm going to ask you guys some specific market questions. And shall we do it now? And what I'm going to do is I'm going to give you a topic. These are really simple. I'm not going to give you a massive topic. I'll give you a topic, and you're going to tell me under your presidency whether they'll go up or down, right? In your opinion, and please, if you don't know, just say you don't know. But this will be interesting for us if you guys are going to do it, okay? So if your candidate wins, oil, Adam first, up or down?
Oil, down.
Yeah.
Down.
Gordon?
Yeah, absolutely, down.
Actually, that's an interesting question, because there will be some markets, we spoke about this idea that some markets might do the same thing regardless of who's in administration. But yeah, down.
Right. What will happen to stock markets if your candidate wins, Gordon?
That is a really good question. I feel as though the initial move will be up, just like it was last time. A lot of people were saying Donald Trump's presidency is going to mean bad things for the market. And in the Hillary Clinton Donald Trump election, I remember that night I was actually at a hedge fund guy's house, and I was watching the futures as the election returns came in, and there was this huge V. Markets were heading down, down, down as it looked more likely that Donald Trump was going to win, and then all of a sudden it just switched and it took off and went up very strongly all the way from November to the end of the year. He hadn't even been put in presidency yet. That dynamic was a little different when Joe Biden won. All of a sudden, Chinese electric vehicle stocks shot up between November and the end of the year, right after the Biden election. So, I mean, you just look at the past two elections, we have a pretty good indication of how the market is likely to respond. And I believe that the initial reaction will be positive, that people will say, oh yeah, Donald Trump's going to help the US economy and that's going to benefit everybody. So up goes the markets. And whereas in the other side, if Donald Trump loses, then whatever particular area that policy shifts are going to send some money, you'll see those stocks jump up. But I don't think that will run the whole market up. But that's just based on what's happened the last two times.
If your candidate wins, what will happen to stock markets?
Me. So again, this is a really good point. If we decide, if they, not we, I mean, I guess we, if I represent them, if they decide to put money into investing in green energy, for example, we'll see those particular stocks potentially take a benefit from that and boost from that. So that's one of the things I think is a very real thing. I mean, also, for example, like the electric vehicle thing, EVs is very much, tends to be more of a Democrat type of thing. They tend to prefer that, whereas Republican, this is a generalization, by the way, Republicans tend to be sort of pro-oil, and but generally the market tends to be electric cars favors Dem. So it's interesting to see how that might develop. Hybrids, EVs, very interested in that. Plus, solar power, wind, all those different things as well. There's some really good potential opportunities there. I look at BP and Exxon, and they're really kind of sort of trickling over, not really showing much growth. I think also we are due for a big correction. As I said, the markets are running a bit hot at the moment, so I expect that to happen. But I would see that as a buying opportunity for investors' portfolios. One other thing I wanted to add in here for the general, just generally for guys, is that whenever there's stimulus cash, it's really a big sort of a kind of a big grab, power grab, not a power grab, a money grab for big US companies tend to do those. Take advantage of the stimulus cash, low interest rates, often they're forgiven and they borrow that money even if they don't need it, and they put it into the stock market and then boost the stock market, it juices the market. So
I'm gonna,
interesting then.
I'm going to put a 30-second timer on these questions going forward.
Okay.
And I hope you guys don't mind. I think that for the people who are watching, this stuff's really interesting. I'm finding so oil short, stock markets long. That's where we appear to be going either way. Look, you talked about the difference between Democrats and Republicans traditionally around, if you like, green energy versus oil. What about uranium? What about nuclear? Let's go with Gordon first.
Yeah, so you had, if you look at markets that are likely to be unaffected by the election, I think uranium is one of them. The uranium play is really an uncertainty play on global conflict. And you could say, well, nuclear energy, that's true, but I think that's a longer, slower burn. I think, the fear and the nervousness of global conflict is what is going to move those markets. And I don't think that's going to be any different, regardless of whether it's Kamala or Trump.
Adam, agreeing or disagreeing?
I think that's a fantastic answer. I think it's a great answer. And it's the only thing I wanted to add to that is there are times when it feels as though Congress, because obviously you've got your citizens and you've got Congress, which effectively can decide things for the country. This is one of those things where Congress might make decisions that are never really the decisions that are led by citizens. And so it'd be interesting to see what they do. And there's often again, bipartisan, which means that both sides have agreed on stuff. So it will be interesting to watch what happens with that. Nuclear, it's unpredictable because some people think it's a really sensible way to go, and some people are worried about it. So I think I just wanted to add that, but my response would be identical. It was a great answer.
Right. I've got two more, and again, look, I'm going to keep it as brief as I can. I think that for people traders watching this kind of stuff is really fascinating. I really appreciate you guys sharing this. Do put it in the chat if you want me to bail on this. Guys, my next one, gold. Let's go Adam first.
All right. So gold is, I could show you the chart, but let's keep the answer short. Gold, I'm concerned, is going parabolic. Now, the last time I saw it go parabolic and just accelerate like that was 2011, after which it subsequently crashed. It didn't really start to go back into an uptrend until 2019. And so I am concerned about that. I think at some point, if you think that gold can never crash, it absolutely can. And if you don't believe that, you could experience that. When I say crash, I mean a really big correction back down to $2,000, for example, an ounce. I think it's due at some point. The only thing I can't say is it'll certainly be in the next 4 years, but I can't say if it'll be 2024, 2025. I can't say that, but I do think we're due for a correction on it. Overall, though, I think gold over the next few years could potentially maintain its bullishness, but it needs a correction.
Wouldn't if Trump wins, how will it affect gold?
A weaker dollar again will boost gold anyway.
Adam. Sorry, Adam. I've got to go on this one. Sorry.
I feel like a Trump win would keep gold going higher a little bit, but then, as Adam mentions, it is due for a correction. Here's the thing about gold. What I believe is driving it higher is the uncertainty. It is that commodity has become the lightning rod for people moving their money as a hedge against uncertainty and unknown. So although I'm watching the oil chart to gauge the possibility of Trump actually becoming president, I believe that what people are doing about it right now in the uncertainty that's out there, and not just the election, but global conflict, what's going on with Israel and Hezbollah right now, and various things. I think gold is sort of catching all of the uncertainty trade. And so regardless of who wins the election, once the election is done, I think gold is, that uncertainty premium is going to come out of gold. I think with Donald Trump, the uncertainty will hang around for a little while, and so it might that pullback might take longer to come out of gold if Donald Trump is elected, because people are going to be, well, what's he going to do? Is he going to do something crazy? Is he going to incite more global conflict and so forth? And so I will hedge this by saying if Kamala wins, people might anticipate more government spending, which would be more inflation, and then they would keep their money in gold, and there might not be as much of a possibility of pullback with a Kamala win as there would be with the Trump win.
Well, to be honest, so far I'm loving your answers, and I've got about 400 new questions I'd like to ask you, but I'm just going to try and keep us on the track we are. I've got one more product for you guys. Bitcoin. Trump win, Gordon. What happens?
Yes, I've really been surprised that we've seen a divergence between gold and Bitcoin here. Bitcoin is going up, recently, not nearly as strongly as gold, though. And so that tells us something really important. For a while, people were saying Bitcoin is gold 2.0. And surely it is capturing some of the uncertainty premium associated with the election. Again, post-election, I think Bitcoin's in for a rough ride because that uncertainty premium will come out. I think that with Trump, Bitcoin is more likely to go higher, though, because of the less government regulation, more innovation, encouragement, that sort of thing. And with a Kamala presidency, I think Bitcoin is going to find a ceiling.
Adam?
So I tend to, I tend to sort of correlate digital currencies more with tech stocks as opposed to with gold, for example. I mean, it is a digital commodity. Obviously, that's the way, because obviously you can mine it. There's some amazing sort of parallels there. And also, if you lose it, it's gone, right? So if you have a gold nugget in your pocket, or you've got your cryptos in your crypto wallet, you lose it, it's gone. But I tend to find their behavior tends to correlate a lot more with Nasdaq, for example, general tech stocks, because they're in a own way as a digital currency. I think so. In answer to the question, I think that, but I've seen some deviation. I find this interesting. A little bit of occasionally, I've only seen it twice in about the last 5 years, where cryptos sort of broke their correlation away from the rest of the market. We had a period, I think, last year where cryptos are climbing while the rest of the market was struggling. Anyway, I think cryptos have their own thing going on, and therefore they are likely to. I think it's good. Gordon said that they're likely to have a bit of a rough time depending on certain circumstances. I think cryptos will lean slightly more bullishly, but I don't necessarily know or feel that it's going to be a smooth ride.
Right. Look, I really appreciate that. I know that was off script and out of the questions that we provided, but I think for people who are listening, though, there's fascinating things. Really, and I'm going to come back to one thing here just to be really clear on it, Gordon. In your mind, a drop in oil price points to a Trump victory. That's the thing you're watching for as far as it goes. A drop in oil price for you suggests that your market is starting to prepare for cheap US oil to come back into the market, right?
Yeah, and a Trump victory, or the expectation of a Trump victory, ought to be signaled by by oil moving lower in anticipation of favorable U.S. oil production.
Like, if you take one thing away from this debate that's really valuable, I think that's really valuable. I think as a trader, being able to get a little bit ahead of the polls, because the polls aren't telling us enough. And as you say, the debate about which media you can trust, which media you can't, that can go forever. We could do a couple of hours on that. But, some clarity would be really good for traders. Look, I'm going to I've gone backwards and forwards and lost my way. I'm going to go to Gordon first on this one. We've covered one of these with uranium, but are there any markets you feel will be indifferent or unaffected by either candidate? Be able to make no difference who wins?
Yeah, I think that's a great question, because now when we say unaffected, I don't mean. I mean, I'm not taking that to mean sideways. I'm
Sideways.
taking
Yeah,
that
you
to
mean
mean whatever trend they're on, up or down, won't change regardless of who wins the election. And I think that those are markets and trades that people want to key on. And my list here, I'm trying to. There we go. So the big one is interest rates, and this is going to then waterfall to others. And the interest rate, I believe, is on track to start easing a bit. The Fed showed us with a double rate cut. If in fact that's political engineering, then that rate cut's going to go away, and they're going to either hold or even raise rate cuts. I'm going to give the Fed the benefit of the doubt and say that they're just doing their job, and that they think the answer is we got to do rate cuts. I think there's a big reason why too, and that is that's the right decision, independent of
Administration.
of the sorry, the political situation, because the what's called the yield curve, the difference between the 10-year and the 2-year note, has just recently stopped being inverted. So interest rate curve is back to normal. That's the chart I'm showing. The fact that it's come up over this red line. Historically, when you have a market, I mean, inverted rate yield curve, sorry, then when it comes out of it, that's a huge possibility for depression and recession in the U.S. markets. And so it might not matter which candidate takes the stage for the next 4 years. The U.S. economy could be in very serious trouble. So I don't want to say that's going to happen and it doesn't matter, nothing can be done about it. But that interest rate chart has a lot of people concerned and worried. And I think the Fed is concerned about it. And that's why they've started to ease interest rates, with the anticipation of trying to stave that off. They're not usually forward looking, but a big rate cut, the double sized rate cut that they had told us, hey, there's something that we got to pay attention to. And so trailing from that, home building, I think, might hit some headwinds. We talked about nuclear energy, U.S. defense. If you look at U.S. defense stocks, because of the global conflict premium, those things are just trending through the sky. And I think that that will continue because we don't see an end to the Russian-Ukrainian conflict. We certainly don't see an end to the ramping up of the Middle East conflicts and so forth. And then here's one that is a little counterintuitive. I was checking the charts in anticipation of this and was really surprised. Auto sales and auto parts companies in the U.S. are on a general upward trend. Auto parts are kind of stalled, but auto sales are really moving up. And that's so surprising to me, but it likely is in anticipation of lowering interest rates, because lowering interest rates means more people are going to buy those cars. And this is both kinds of cars, electric vehicles or otherwise. So I think that's another area where there's a bullish trend that's likely to continue regardless.
Cheers, Adam. So, what are the markets you feel are unaffected by by who wins? And again, we're not saying they're going to go sideways. We're going to say that they're going to go up regardless of who wins, or they're going to go down regardless of who wins.
So this is great. I mean, there's there's so much overlap between what Gordon was saying and kind of my opinion as well. There's a couple of deviations, but it has nothing to do actually with the party. So markets, and I think the stock markets will continue to rise. But here's where it gets interesting. I think currently a big part of that is, and this is something to go back to 1929, where a large part of the access to the market is by the wealthy. I think that an increase in taxing the wealthy would be good. Obviously, there's deficit, which we haven't spoken about yet, but I think that's a big part of doing that. But what would be interesting would be to see if the middle class grows. The middle class would then start to engage more in the markets, which means that you might have a little bit of a you have a bit of a wobble, but you tend to see the markets increasing. So, in other words, under a Trump administration, I believe there'd be tax, cuts for the rich to keep the market going. Under Kamala, I think it would be more middle class. And I think in both cases, you would see more engagement in the markets, and therefore I think they'd continue to rise. With the vehicle stuff, I completely agree. I think we're slowly, the move to electrics or to hybrids or to hydrogen, liquid hydrogen kind of vehicles, for example, is a very slow move. It's slower than we think it is. It's a 10, 20-year move. The defense stuff, I think, was really a really good point. Global conflict is not really going to come under control, I think, until we can see a real closure on Russia, for example. Iran is also obviously an issue there as well, so need to do that. Also, the other thing is that if the market's not broke, so let's just say that the Trump administration takes over. If the market's not broke, then I don't think they're really going to do too much to interfere with it unless they absolutely have to, because it doesn't make sense to do that. The other thing I found interesting is I'm still influenced very much by Warren Buffett. So this is where we deviate on what we think how the markets will react to stuff. And this isn't to do with a political thing. This is to do with our interpretation potentially of how the markets work. I'm very much influenced by Ben Graham and Warren Buffett, where your stocks portfolio is split between corporate stuff, which is stocks, versus kind of government bonds as well. And I see bond buying as more of a redistribution of kind of in terms of either variety in your portfolio or just, so the fact that the bond markets are starting to get more attention now and they are now to me more appealing as a diversification option for to be sold to clients. It could be a cause and effect thing. It could be the tail wagging the dog and we could see other things happen. But for me, I think the bond markets are very stable from a technical perspective and very appealing for traders and potential investors. And now they're getting bored. Okay, crypto's not doing anything. Let's look at bonds. And so they'll start to get pushed by institutions. So that's a different take on that. Anything else? So with regards, just kind of let me wrap this up. So I think, gold will continue to climb. China is one of the bigger kind of buyers of gold right now as well, and traders and institutions are jumping on that big move. So after the correction, I still think for the most part, most commodities in general, we're a bigger planet with more people on, we're consuming more. I think commodities, the ones that are currently climbing, yes, food stuff as well, I expect to be the case. Where I really want to see breakthroughs is pharmaceuticals. AI is starting to make real groundbreaking stuff with regards to cancer detection and all kinds of other stuff. Technology is as well very interesting. So I'd love to see a rise in that area. So we could see some AI. So not AI itself, but the support that AI provides to other industries. So I'm not talking about NVIDIA here. I'm not talking about ChatGPT and things like that. excuse me, and that I'm looking at other areas where they could use AI to improve the quality of the speeding up of research. So pharmaceuticals, I think, is going to be interesting, but then of course the policy of Kamala is to reduce the cost of certain things. So what else? Let me just see if I can wrap it up in the
Let's
next
say
20 seconds.
time on that one. Time on that one.
Okay.
Rightio. So we have got one question left. And we're going to go to Adam first on this one, then to Gordon. How will markets have changed 2 years out if the opposing candidate is elected? So if Donald Trump is elected, how will markets have changed 2 years after the election?
So, to be a little bit controversial here, I'm concerned genuinely, human to human, that Donald may not be around. His health isn't quite right. I think Vance is really going to be the leader in this. So I think it's possible. Sorry, let me be clear. I think that it's possible that Vance will be the president in a couple of years' time, or at least before the next 4 years are out. And so then what would be interesting is what would the Republican policies be at that time? Again, they would revert more to tax cuts. So we would see very similar behavior that we saw, almost more emphasized than we saw in the last couple of years of the last administration. That's what I think would be the case. But it would introduce uncertainty into the markets, and therefore we would see more uncertainty, but a lot more uncertainty, because how often has a president been replaced by a vice president? I'm not trying to conspiracy monger here, guys. It's a genuine, real strategic concern that is sitting on my books.
It was one of the fascinating parts of this election, isn't it? That and look again, I don't want to get into the conspiracy theory too much, but it is ironic that Trump managed to use Biden's age against him, and now with Biden gone, the other side's going to try and use Trump's age against him. It does seem to go around in circles for me around this kind of stuff. And as long as Americans are bad shots, as long as we've got a long time to go. Gordon, if we get a Democrat win, where will markets be in 2 years?
So the thing that is consistent about the Joe Biden administration is that a greater amount of decision-making power and money influence has been consolidated into the White House and the White House administration. It's an interesting thing to track, but if you go back several years ago, 10, 20 years ago, the amount of money in terms of congressional budgeting, which they don't actually do budgeting anymore, but it's more along the lines of entitlement. What the government is allowed to spend for its own direct influence. The amount of money that was under the control of the White House was about 20% of all government spending. So the White House, that arm of government, was only in charge of about 20%. In the Biden administration, that reached 60%. So the majority of money that the U.S. government is allowed to spend is now under the control of the White House administration. So if the Kamala campaign were to win and that presidency were to continue on, it's going to have more impact on the U.S. economy than previous presidential candidacies have had. I mean, you can always make the case that, well, the president really doesn't matter that much. It matters a little, but not that much. He's not driving the economy, or she's not driving the economy. Well, in this case going forward, it might come closer to that than ever before. The kinds of things that Kamala says are there's a lot of rhetoric around government regulation for various, good purposes. Things like climate change, trying to address climate change, things like trying to address social unrest through curtailing or regulating social media, and gun control to ostensibly reduce crime, things like that. But the answer in all of those cases is government intervention, government control, government regulation, and that always implies greater government spending, more budget being thrown at that particular problem. So there's no question that what will happen with the Kamala presidency is increased government spending, and increased government spending led to well, not unprecedented, but inflation that the U.S. had not seen for 40
Minutes.
years. And so I think that a Kamala presidency is likely to bring back inflation.
Cheers, Gordon. Thank you very much for that, Adam. Thank you very much for that. Look, it's really interesting as traders. I'm going to say I'm going to hand over in a few minutes. I want to talk to Gordon about some other edges in a few minutes that are important in the market. But I've got, as a trader, I've got this. I've got oil possibly looking to the short side. I'm possibly looking for a rally in stocks regardless here. Gold possibly a rally followed by a pullback. Again, guys, if I'm wrong about this, let me know. I've got homes largely on the down. I've got US defence largely on the up. I've got auto on the up, which surprises me because of the possibility. I mean, we haven't talked about tariffs, and tariffs will have an impact on protecting American automotive dealers. The Trump presidency should be good for American car prices, I would have thought. And pharma possibly on the way up, and I appreciate that, guys. Hope you've got some notes of your own. Adam's PowerPoint file is in the Dropbox for you to have a look at as well. Look, Gordon, I think one of the things that's really important is that this stuff is going to be important. And right now we have a market that's a little bit unusual, but markets come back to normal. And you've got a product that helps identify for every product pretty much what normal is, what its best trading facility is. What can you tell us about each fighter and how it works? And look, I know that we gave a lot of them away last night on a great deal, but I understand we're going to have a space for a few more on a great deal tonight. Maybe you can get up to 10 people for this one. Can you tell us a bit about your product?
Yeah, so thanks, Paul, for letting me have a chance to tell people about the project that I'm working on. I just put a link in the chat for people to get access to the same deal that you offered through the New Opportunities Summit. So a year ago, a close friend of mine came to me. He's a very talented programmer, and said, "Hey, you and I had a conversation years and years ago about what it would take to be able to have a way of trading effectively, trading with an edge, even if I don't know a whole lot about the markets." And so I looked at his project, and I got so excited about it that he and I have worked on it together for the past year. And basically, he has taken machine learning, sort of an AI-like approach, to finding the very best way to trade individual assets. And this can be anything. It can be a stock market. It can be an individual stock in the US or even on the London exchange or the Hong Kong exchange. It can be a currency. And in fact, I've been using it the past couple of months on half a dozen currency pairs and been really excited about the performance. 2 weeks out of the gate, I had, showed surprising gains just by trading little in and out on various currencies. So it's a fun tool because what it does is it tries to evolve out solutions in a way that mimics natural evolution, but much faster, in minutes rather than eons, And so it evolves out solutions based on the past 20 years of data or more, and it says, hey, over the past 20 years, here's what some good rules would have been. And it doesn't, rather than making you have to learn the rules, because the rules can be very complicated, it just gives you a trade signal. It says, you want to execute this solution, then we'll give you trade signals based on it. And the trade signals are simple. They're, get in here with this limit order, get out there with a stop or a profit target. And so it's very clear trading signal, and it works in all kinds of different markets. So we're really excited about it. But we have been offering it for $50 a month, unlimited use. And we realized, hey, people want to get a taste of it and sort of dip their toe in the water. So we created this offer where people could use it for only $5 a month. We limited it. Instead of unlimited use, You now get one trading signal instead of however many trading signals you want. But the one trading signal is not just one signal in a month. It's one asset, one stock, and as many trading signals as show up for that asset. So if I say, well, give me a trading solution for the euro US dollar. Well, fantastic. Here's a solution, a set of rules that would give you a number of trades, and it might be 10 trades in the month, and so it would give you those signals as they come up. That's in order to get that. Make sure that you have to both sign up and subscribe. It's a two-stage process. If you go and make use of the offer, you're going to want to sign up. That'll give us your email so that we can contact you about education, how to use the tool and some useful ideas for it. But the other part of it is that you need to subscribe. That's where, the $5 a month comes in. And that's what will allow you to get trade signals sent to you. So hopefully you'll be able to get some use out of that. And we do weekly webinars to help people learn this tool and use it effectively. I have cut down my trading time amazingly. Instead of spending 1 to 2 hours a day with Edgefinder, I spend an hour or two in a month evolving some solutions, and then after that, it's just minutes, 10 minutes or less a day to put on my new trades based on the trade signals that come through. So I've been shocked that it saves me that much time.
Gordon, can I get this right? You were talking about picking a product like the euro dollar. It's going to research the best trading method to trade that over the last 17, 18, 20 years. It's going to test a million different options. It's going to come back with one. And it's going to give me every signal on that strategy for a month for $5.
Yes, that's right.
How can I lose? I mean, I could lose $5. I mean, but I've got to be prepared to go through a two-step registration. I've got to be prepared to provide some details, verify my email, and then purchase it, right? I've got to be prepared to spend maybe 2 or 3 minutes here, right? 2 or 3 minutes here to get that. And not only all the currency pairs, I can pick anyone I want, but how many individual stocks?
That's all of the stocks on the NASDAQ or New York Stock Exchange, but also all the stocks on the London Stock Exchange, the Toronto Stock Exchange, the Hong Kong Stock Exchange, Shanghai. It's just we've implemented many global markets, not all of them, but so we're talking about thousands of different stocks that are available for you to actually choose from. One, let me throw out here, is a whole class of stocks which up until right now has not been a good trading mechanism, and that is penny stocks, low price stocks on the US Stock Exchange, stocks that are lower than $5 a share. This has not been a good market up until just now, but now those markets are having a big resurgence, and finding stocks that are that low priced but to trade with is a huge opportunity. What would be the best possible way to trade with them? I've been exploring that with this Edgefinder tool now.
All right, let me do this again. First of all, it's a good measure of inflation, isn't it? When a penny stock is now under $5, because $5 is a lot more than a penny.
Yeah,
But
right.
so what you're saying is I can pick any of these stock markets I like. I can Google and guess, just pick randomly any stock I like, and you can pick me out the most profitable trading method on that over the last, I think it's 17, 18 years, $5.
Yeah. Yeah, not
That's
only that, we
ridiculous.
can back test up, to 20 years, and then we can forward test out of sample data what those rules would have done had you implemented them 2 years ago. And that's not looking back at the data and optimizing. That's just saying, okay, we got the rules up to here. Now let's see what they would be like going forward. So it's very powerful. It's not just back testing, it's also forward testing. And it helps you really understand whether or not you've got an edge to a trading system that is worth putting your money into.
We're going to let 10 people today go at $5 at this. Honestly, look, I've seen We ourselves have sold. Jordan was doing trade calls for us a while. We were selling them at $900 a year. You're talking about $5 a month. And sorry, just to be clear, this isn't one. Is this one of those little sneaky ones? Like it's $5 for 2 months and then it's $200. Is that what we're doing here?
Yeah.
Or is it $5 a month ongoing? You get to pick your product and take your trade calls.
Yeah, thanks for asking that. No, this is not some we're going to raise the price later. $5, and then for as long as you have access to it, that's all. That's all that you would be charged is $5. Now you can upgrade. There's unlimited use options, which cost more, but there's no forced upgrade. There's no. It's cancel anytime. There's no year-long contract or anything like that.
This is so literally my entire risk on this is $5 US. I mean, so it's about 19 New Zealand dollars to be fair, but five US dollars was my entire risk on this. At the end of the month, I'm happy. Kill the $5 and be done. You're going to give me full training on it and videos. Cheers, James. Thank you. I knew that was coming. Thank you very much. But we will jump out pretty quickly. I know you need it somewhere else. So $5 is my entire risk. And at the end of the month, if I haven't made $5, kill it. Right?
There you go.
So I've got a trading account with $1,000 in it. I do euro dollar. I trade it for a month. If I don't make $5 a kill it. If I do make it, I keep it. Right?
Yeah, that's it. It can be that simple.
I knew I liked you, Gordon. Look, the link for this remains in the chat for everybody. We're going to get 10 people into this today. I really appreciate it. I did ask Gordon because it's been a rough month on the Wave Rider. We did ask Gordon if we could make a special offer for this couple of days last night for the update and today. A lot of those been out last night. We've got 10 left. If you want the 10 done and get them in, look, we talk about limited offers. I mean, he can't do this forever, right? It's a starter pack.
Well, that is what we named it, the starter pack, because limited functionality gets you started using the thing. But it is not a starter pack for only it will go unlimited at that price.
Yeah, so we're definitely not saying here $5, $5, $200. We're saying $5, $5, $5, and every month make your own decision. Look, if this month you download this, you do dollar again, you make $4.97, cancel the damn thing. You lost 3 cents. Up to you, right? But I would suggest to you that this will not last forever. We've got 10 spots, and I can see it filling up in the chat. Need to check. Just to check, need download to MT5 platform. No, you just need his software, and it gives you the trade signals, and you trade them on MT4, MT5. No problems. It's not auto connected trading those for you, all that. So next 12 months, Gordon, it'll auto trade for us, right?
Yeah, we would love to be able to integrate with some brokers and so forth. And we actually do have an integrated to some US stock brokers, but we don't have any Forex brokers. So what you do is you get signals and then you trade them wherever you want.
So look, I mean, this is tough on us, right? I've got to provide my details, verify my ID. I've got to click on the link and pay my $5, and then I've got to be taught how to do this. It's going to take me half an hour because I've seen the system. It's not that hard. And then I've got to pick my product, run it for a year, take my trades, run it for a month, take my trades, make my money. This offer is $5 a month. It's normally $50 a month for full, $5 a month. Equity stocks from Dennis. Will you provide equity
that's
stocks?
right. Yeah. Equity stocks, ETFs, even indexes. We found Anne was using it to trade, and she found that she could create a trading solution for the S&P 500 index, the SPX index, by using it on the London Stock Exchange. So some Forex dealers give you the ability to trade SPX versus the US dollar, as an example. That can be done by generating a solution for the SPX index, while the London Stock Exchange tracks that. And so, yeah, we can use an equity index now, not just commodities or currencies only on various broker or Forex broker accounts.
I'm going to post the link once more, Gordon. We do have to get on. I know that they have moved to another Oh, you can't do that on here, can you? I can't post it again, and James is gone. Look, first of all, if you've joined us in the Zoom, it's been great to see so many of you in here. Fantastic numbers coming in on X as well. The different Facebooks, the YouTube, the LinkedIn. It's been great to have you along, and we appreciate you joining us for this. I really hope you've enjoyed it, but more importantly, I hope as you look forward to this US election, you've got a side to be on. Not a side of who's going to win. Who cares? Like who's going to win, right? A side to be on as to where you might put your money, how you might position. And in my opinion, with something like the US election, it's about building a position over a period of time. And you're looking to get early in advance and to slowly build a position. Maybe it's all short. And that's how you prepare for big events like this. You don't sort of pile into it. You build it very slowly. Cheers, you've got us today, mate. Yeah, no, Pyro more, mate. Pyro more. Man, it's a polo too. Thanks for joining us. Look, I really want to thank Gordon and Adam. It's really easy for people to sit around and have a beer and wax on about this kind of stuff, but to front up and give us data and give us information we can use, I really, really appreciate it. So to Gordon and Adam, thank you very much for your time. It is much appreciated from us. Can you
Thanks,
post the
Rob.
link for the $5 one again, Gordon? Look, they can commit to $5 today, and they can look at other levels later on, right? If they want to do this, they need to get in, right?
Yes.
So click. You can see my name on the end. It's our subscription. I'm getting a massive affiliate fee out of this $5. Look, go to the Traders Toolbox and vote for who won the debate. It doesn't really matter who won the debate, but go to Traders Toolbox and do that. We'll make sure that the offers go into Traders Toolbox as well, and you guys have got them going forward. We say this all the time, right? I'm going to say it to you guys again. As long as you're turning up, we can help you. So I love seeing people at these kind of events. I love the commitment. Thanks for being here. Take it away now and turn it into money. That's what I want to hear. I love your thanks. People are posting thanks, and that's fantastic. Message me in November the 6th or November the 20th or December the 3rd and say, out of this, I made money, because that's what it's all about. Cheers, everyone. Thank you. We'll be going in a few seconds. Thanks, guys. Cheers. Cheers. Thanks, Melanie. Thea. Cheers, Gordon. That was amazing. Jump in on that offer. If you haven't jumped in, jump in, and $5. Get that offer. Put me down for one, Gordon. I'll be back in touch. See you all. Thank you.